Here's a little interesting data about the ultimate buyer of all of these tech stocks, which is the NASDAQ, right? People that buy stocks in the NASDAQ. Listen to this as of yesterday. More than 45% of stocks on the NASDAQ are now down 50%. So basically 1 in 2. More than 22% of stocks on the NASDAQ are down 75%. So almost 1 in 4 and more than 1 in 5. And then more than 5% of stocks, so 1 in 20, on the NASDAQ are down 90%.
All right. Welcome back, everybody, to Altcoin Daily. My name's Austin. We are right in the middle of one of the most severe financial market crashes in history. In fact, really, the only comparisons would be the dot-com crash of 2000, as well as the housing crisis of 2008. And just to read this specifically, the only comparisons are October 2000 to October 2002, as well as November 2008 to April 2009. That's where we stand in global markets at the moment. And if we look, right here is 2000, right here is 2008, and right here is where we are today, 2022. This black line on top represents the NASDAQ. And what do you notice? Well, first off, from 2000 to 2002, we fell down way lower. In 2008 to 2009, we again fell way lower compared to where we are right now in 2022. So if everything would be equal, most people would say we're almost there. A little bit more to go, and then time to go all in. Maybe that's, everybody make their own decisions, do their own research. Nobody can see the future. This could be nearing the bottom, or maybe this could be just the beginning. Nobody can see the future. Now, if you hold Bitcoin, if you're invested in crypto, this video is for you. We are going to go over specific altcoins that are still implementing, that are still progressing, what you need to know. But first, let's just finish with, is this global recession almost over? Or do we have much more of a crash to come? In this next clip, and I hate to be so clip heavy, but Chamath, as well as Paul Tudor Jones, such valuable minds in the investing space, are both on record that this is a nasty time to be involved in the market. You can't think of a worse macro environment than now, Paul Tudor Jones. Listen to this next clip from this morning, this just happened, of Paul Tudor Jones flat out saying, you don't want to own bonds, you don't want to own stocks right now, and what happens next in the market has everything to do with what the Fed will do next. Watch this.
Do you look at that, Paul, and say to yourself that a recession is coming? Do you say everything's on sale, I got to buy things? Do you say that I got to short this market? I mean, I know you say you don't have a strident view, but you must be telling your traders to do something.
Clearly you don't want to own bonds and stocks. You start with that. It's going to be a very negative situation for either one of those asset classes, right? You can't think of a worse macro environment than where we are right now for financial assets. And again, one of the reasons, I think maybe the biggest differentiator between now and those other periods over the past 40 years is look at the level of overvaluation that we were both in rates as well as stocks. So that's one reason why even with this tightening in financial conditions, the Fed still probably has to raise rates to get inflation under control. Heck, we had CPI greater than 8%. Maybe it comes down to 4% this year. Maybe it comes down to 3% if they stay the course and stay tight. It's very difficult to calibrate once it escapes like it has now. That's the scary part for Jay Powell is the genie's out of the bottle. And we've seen in history when the genie's gotten out of the bottle, it's really, really hard to put it back in there. So, no, I wouldn't want to be in his seat right now.
All right. So essentially what Paul Tudor Jones is saying is the Federal Reserve right now is stuck between a rock and a hard place. If they raise rates, yes, they taper inflation most likely, yet they send the economy into recession. If they don't raise rates, then inflation goes crazy, continues to go crazy. All investors are watching the Federal Reserve's actions right now. And let me just be very honest with you, and most of you long-term subscribers, you know this. If traditional markets tank, crypto will tank with it. Everything is correlated to everything else in the short term. In '08, gold dipped along with the NASDAQ, along with stocks, along with housing. Gold dipped along with everything else. Gold crashed, but it was one of the first to recover. Now, something to consider, which most other channels aren't talking about it, in our video, Top Crypto TA Expert, Why I Just Longed Bitcoin. In this discussion, we talked about the DXY, US dollar currency index, that even though the US dollar is getting inflated away, it's garbage essentially for retaining value. If you compare the US dollar to a basket of the other top currencies around the world, the yen, the pound, etc., the US dollar is growing in purchasing power, is growing in value when you compare it to those other nation-state currencies. So the US dollar is sort of the best garbage out of all the garbage. Looking historically in the last decade that the US dollar currency index reached this sort of peak, that's when Bitcoin has historically rallied. That's when assets historically rally because the US dollar has more purchasing power, relatively speaking, and money, capital, flows into harder assets. This discussion is linked below if you want to check it out. And finally, the last clip I do want to share with you from Paul Tudor Jones from this morning is he is still bullish on Bitcoin and crypto in the long term. He just said don't own stocks. He just said don't own bonds right now. But he is still bullish on crypto because of the long-term potential. Watch this clip of why Paul Tudor Jones is still holding his crypto. Watch this. His Bitcoin. He's a Bitcoin guy. Watch this.
Here's what I see. I see a generational divide, and it's a digital divide. And unfortunately, Joe, you and I are probably on the other side of it, though I think we're both scrambling as fast as we can to understand it. And I see it all the time in our quant groups. I see it all the time in my kids' friends. If you look at the smartest and brightest minds that are coming out of colleges today, so many of them are going into crypto. So many of them are going into the Internet 3.0. It's hard not to want to be long crypto because of the intellectual capital, just the sheer amount of intellectual capital that's going into that space. The number one thing that's holding it back is the fact that you're not going to get buy-ins from governments because they lose the ability to control the creation and the supply of money. Having said that, in a world where we're starting to deglobalize and breaking down, and actually probably going in reverse, that ability to have the borderless internet, that ability to have a store of value outside of necessarily having your money denominated, whether it's in rubles or yuan or dollars, it becomes very attractive. So I've got my modest allocation to crypto. I have a trading position on top of that.
All right. Give me your thoughts on this down below. My takeaway is Paul Tudor Jones essentially saying, hey, this is not going to be easy. It's not going to be a smooth road for crypto. We're seeing that now, choppy markets, but cryptocurrency is inevitable. This industry is only growing, and Paul Tudor Jones is still hodling. Like it. Now, if you hold altcoins, I do have 3 pieces of altcoin news I do want to share with you. But real quick, I do want to thank sponsor of the channel, the FTX App. They are one of the most respected exchanges. They have fees up to 85% cheaper than competitors, and they're literally trusted by millions of users. If you want to get up to $100, I should say earn up to $100, this is how you do it. It starts with downloading their app and using promo code Altcoin Daily. Details linked down below. Take advantage. And moving forward, first piece of altcoin news for Algorand. Algorand has just become the first US blockchain sponsor of the FIFA World Cup. So the proof-of-stake blockchain will assist FIFA in developing a digital asset strategy along with providing an official wallet solution. And why this matters is FIFA's huge. In fact, if you're a part of our European audience, tell us how big FIFA is. This deal, announced on Monday, May 2nd, will also see Algorand become a regional supporter in North America and Europe for the 2022 FIFA World Cup, to be held in Qatar in November and December, as well as Algorand will be an official sponsor of the FIFA Women's World Cup in Australia and New Zealand next year in 2023. If you like Algorand, you like this, but let's keep moving. Next piece of quick news for Litecoin. Confirmed. Litecoin's MWeb privacy feature is locked in. This was confirmed by Charlie Lee himself about 12 hours ago. MWeb locked, he said in emojis. We do have the screenshot to prove it, but what this means if you're a Litecoin holder is, hot off the press, it's been officially confirmed that Litecoin's MWeb privacy feature is locked in. MWeb is an optional privacy feature that, amongst other things, allows the user to hide the amount of crypto being transferred and the crypto address itself. So if you buy a cup of coffee with Litecoin, the cashier doesn't have to see your whole bank account, right? You can keep your financials private and still pay with crypto with Litecoin. This is a major development in the privacy space for a couple of reasons. Firstly, Litecoin is easily accessible, available on many exchanges, allowing users ease of access when using the privacy feature. So most people already own Litecoin or have PayPal or Coinbase can easily get Litecoin. That's huge for their network effect. And secondly, because the privacy feature is optional, it allows exchanges to opt out if regulation becomes an issue. So they can opt out, but you could still opt in. Pretty cool for the space. Now, I'm not sure when this exactly becomes active for you and me, the average user, but code-wise, it is locked in the code. Pretty cool. And that is the video. My name's Austin. Like always, see you tomorrow. Appreciate you.